Hello everyone and welcome to today's morning report on Monday the 15th of August with me, Richard, Pro-Market Analyst at Handset Markets. We've got a general air of dollar weakness that we've had in the markets, basically as a legacy pretty much of that retail sales data that was disappointing on Friday. And the dollar weakened again, and it's pretty much now today sort of weak against all the forex majors. You're seeing commodities that are stronger with that weaker dollar, and also treasury yields. So let me just show you a few of these charts. We've got first of all the dollar index, and you can see here there's a pivot line at 95.25. That actually held on Friday in a rebound move, but just again slightly weaker today, just drifting back towards that level. Is that a level that's going to get retested again? Because that clearly has been throughout 2016 a bit of an interesting pivot, isn't it? Turned on several occasions at that level, and again hit that on Friday and bounced. So it'll be interesting to see if it breaks that level. You got the treasury yields that are slightly lower again today, and again that's putting pressure back on the dollar as we sell off. Now we're seeing commodity prices higher. That oil price, what a move we saw Thursday and into Friday, and continuing today. So continued recovery in this oil price, and it is really gaining traction in a rebound now, and it's interesting to see. Let me just do a downtrend on that. Yes, we're actually now breaking the downtrend on the Brent crude price. Not quite there yet on the WTI, but very interesting nonetheless. So that is what we're seeing today, and that's affecting across markets. We're also seeing equities continuing higher. Now we've had a strong move ever since the Bank of England gave their monetary policy easing decision. FTSE breaking out, DAX breaking out, really strong moves in these European markets, and that's continuing again today. DAX 0.75% up, FTSE 0.25%, just mildly underperforming, but still positive nonetheless. And it'll be interesting to see if that continues to run higher. We've got a little bit of data today, nothing too significant. We've had our early doors today. The Japanese GDP disappointing actually again, disappointing on the quarter-on-quarter data, flat on the month on the quarter, below the 0.2% expected, and also missed on the annualized as well. So disappointing there, and the yen has sort of gained a bit of strength off the back of that, but nothing too significant in terms of the fallout quite yet. Other than that, there's not a great deal of European data until you get the US New York Fed manufacturing data. Now for some, let me just show you the data, which is here. So you can see here, pretty erratic on that New York Fed manufacturing in the last few months. It's actually expected to come in at plus 2.5, which is be interesting to see if that actually is the case, because last sort of 7 or 8 months actually we've seen really significant surprises on that data. So watch out for that when it comes out, because that could have an impact on the dollar. We've also got the NAHB, the National Association of Home Buyers Housing Market Index, again basically around that 60 mark. We haven't really seen too much move either way on that. But the chart of the day that I've got today is the dollar CAD. Now, dollar CAD has been an interesting chart because it's tracked this rally in the dollar, but in the last week or so we've had a succession of negative candles, bearish candles, that have actually now broken that trend. Not only that, we've now completed a small top pattern below 130 figure. I'll show you that on the hourly chart in a bit. You'll see that move much better. But the move is being confirmed by these momentum indicators. RSI breaking down to the lowest since the end of June. Stochastics confirming that move as well. MACD lines crossing and turning lower. So this is now really is beginning to gain traction. It looks like we're going to get a retreat back towards at least 28.50, which is an old pivot line, well, old support really, and was that reaction low in late July. But you look on this chart, on the hourly chart, and zoom out, you can see that 130 figure was a big support, tested on numerous occasions through late July, early August, but then got broken to the downside towards the end of last week, and is now continuing to roll lower. So you'd sort of measure 30 figure up from on a conservative basis, you'd measure that reaction high there, which is actually 32 figure, if I got my figure on it there, 32 figure. So that's 200 pips of downside. That equates to 128. So it would certainly suggest there is downside potential to test that 128.50 level, and with the deterioration of the momentum indicators, I think selling into strength seems to be the way to play. 30 figure is clearly the big resistance. Now, having been the old support turns into new resistance. Already we've seen that level pretty much tested and failed at that level. So between 30 figure and 30.80, which was these reaction highs here on the 11th, there is certainly a big sort of sell zone, ideal sell zone if you got it on a near to medium term basis. But at the moment, we've already had a rolling over at 29.75. So there is again even lower resistance band between 29.75 and 30 figure. So maybe you wouldn't even get to that sort of 30.80 level. So 30 figure would be ideal, but certainly looks as though the sort of outlook for dollar CAD has deteriorated somewhat with the sort of downside move that we've seen in the last few days. So resistance is overhead, and also just notice 23.6% fib, 29.77, pretty much bang on today's high. So I wish you good luck in your trading today, and I will speak to you later.